There's still a ton of immigration. There's no shortage of people wanting
if
to
you
move
can
to
afford
Canada. You
it.
can find people who want to leave afterwards. You can find people who want to go somewhere else. It's still a safe city. We're never going to have a problem with attracting people to Canada.
Right. And that's the thing is you only have to attract this many people, right? So is there this many people that are willing to come to Canada under these conditions?
My challenge becomes like, is it like, yeah, we can attract the amount of people, right? But I think we've learned as a result of interest rates increasing that it's not just the amount of people that creates the stimulation and economic growth, it's the amount of capital that those people have access to, right? And so as the cost of capital starts to increase, your buying power of everyone starts to come down, and everybody's like, oh, prices can't come down because there's excess demand. Well, there will always be excess demand for Canadian real estate, right? I agree with you completely, TK. I could find millions, billions of people in all over the world that would want to move here if they could, right? But the question is, can they afford to, right? And that's where it becomes a challenge, right? Because the average person who's living in the 1% in their country couldn't, for the past, I would say until like a week ago, couldn't afford to move to Toronto and get a job based on the wage and price metrics, right? So you couldn't have a family of two. You couldn't even have be a family of two with two adult children, and 4-income household, and afford to live in Canada, right?
But look at what they're willing to do, though. That's something that's underestimated too. And just to kind of give like a counterpoint here is when people come here and they do come with their education, they come with their skills, it's very difficult to get here. For you to be able to leave your country without a really good, solid economic situation back home. It may be better than or not as great as it would be compared to the average Canadian, but still you're doing well compared to other people in the country that you're coming from. When they come here, they're willing to do things that other Canadians aren't. They're willing to live in the 1-bedroom apartment with their brother and their sister and all their kids and save 90% of their income and eat like food that's like, their expenses didn't double in the last 2 years like the rest of Canadians. Right? They're taking public transit. So they're willing to do things that are necessary for them to be able to afford.
I would completely agree. But I think that's sort of how, you ultimately get to a deflationary situation in the fullness of time, right? Where like, I think that unless we see on the lower end, like, minimum wage increasing, et cetera, like massive wage inflation, as long as GDP per capita is coming down, eventually like the job market will reflect that, or automation will start taking away a bunch of those jobs, right? So in the fullness of time, I would think that we have to end up with a deflationary Canada, even if we're properly repatriating supply chains as a result of what you're describing, right? That we have people who can be more economically efficient than the average Canadian, because the three of us have been raised in such a way that we had access to cheap goods that came from other countries. We've all had access to credit. We could go finance a car. We had great health care, great education that was paid for by the government or subsidized in some way by the government. These people never had that, right? And so their gratitude towards it, and like you say, their willingness to work for it is a lot higher. And eventually, to me, that's like you get more input into the economy for the same amount of output. People willing to work more for the same. But I think that takes a long time to really materialize. Like, it takes a long time to materialize in some sort of like way that would show up as a data point, right? And I don't know if like the net negative effect of it that we're describing, which is like, I guess there not being enough economy for the amount of people, like, because I think that we've outsized
there's not enough stuff for everybody. Like there's just not enough stuff. There's not enough schools. There's not enough
capital,
infrastructure, buses. Like there's not enough.
But there's also a horribly, again, just counterpoints there. There's also a horrible, inefficient use of the land we have in Canada.
Yeah.
And now you have people in the territories now speaking all sorts of different languages. You have Middle Eastern people living in, subarctic conditions when we repopulated Canada 100 years ago, the prairies, nobody was over there. All of a sudden it was French and English Canada. And all of a sudden they're saying, bring in the Germans and, all the other, Eastern European populations. And they started to go there and actually produce. So I think that there's going to be a deflationary period in the urban centers where people are going to be saying to themselves, look, I don't want to spend this money. Look at the cost of how am I ever going to live here unless I can hang on to every dollar that I produce. But there's also going to be a lot of people who are going to be coming and populating parts. We've already seen that. Look at the population growth in name any town 2 hours away right now, right? Yeah. And that's going to have a benefit.
Is that more of a domestic led? Like, I don't really know, right? And I've been trying to get to the bottom of it, but is that more of a domestic led thing? Like, is that Canadians? Like, is that internal migration, right? Because it's the same thing. Like, you're seeing a lot of people internal migration from, Ontario to. I think this is the first. I just shared the article. It came out in Toronto Star. I think it was like the first year in like a half a century where more people are moving to Quebec from Ontario than from Quebec to Ontario, right? So we're actually net exporting people, we're net emigrating to Quebec, which is crazy.
Are they from Ottawa? Are they from Ottawa?
But like, so, there's like things like that, right? And then I think that the other very interesting part, and to me, probably the most important part of, like, when you ask me if I'm like where I think about in terms of Canadian real estate, I think in terms of like where the proper job growth is going to be. And conveniently for me, those are places where I can actually still buy real estate under replacement cost, right?
This show is sponsored by Landlord. How's that, TK?
That was a good little segue. Yeah, no, but I've been playing with it a little bit. Like, you got a lot of different functions. Like, anybody that I've brought it to, they have encrypted back ends. They know exactly what they're doing. The main thing is that you're going to get analytics on your deals to know exactly where you stand. You're going to know way more information than you would just by using an Excel spreadsheet, or what honestly the majority of investors that I know of have a very vague picture where they stand with equity and cash flow and actual net dollars and return on investment. So huge system, really nice layout and platform, the way that they've got it all set up. So it's free. Check out the link, open it up, register an account, put in one of your properties, put in all your properties, analyze some deals, whatever, play with it and see what you think and let us know in the comments. Well, just don't listen to us, come to the webinars.
Wednesday, June 1st, 7 p.m. Eastern time, Toronto time. We have our webinar. And also, go click on the link below and register for free and check it out.
So I've been purchasing real estate in like French River, Ontario, as an example, Sudbury, like a lot of area, Kirkland Lake, like, et cetera, a lot of areas with exposure to, again, like those industries that I've mentioned. And Darryl, I'm not sure if you're on the Twitter space when we did like the coast to coast things, but like with the stuff that those Saskatchewan guys.
Yeah, Saskatchewan's crazy.
And to me, like, again, like the prairies. So first of all, Saskatchewan is one of the only provinces that the two cities are the only two cities that haven't seen growth since the beginning of pandemic. So basically prices are the same as before as they are now. Mm-hmm. And to me, and like, even if we see a bit of a recession, maybe they'll actually see more of a contraction in prices there just because of credit tightening. But those are areas, like, to me, we talk about metals, right? So like, my question is like, where are we diversifying the Canadian economy into? And like, we could grow potentially enough of a grain supply, because grain is going to be a big thing.
Saskatchewan is the place, dude. We did a whole show on it like a few months ago. I don't get why everybody isn't like flying into Saskatchewan.
Right. And it's a beautiful province too.
Well, the land is flat, but so is the real estate market. It's not exciting. It's as flat as the land.
But that's attractive to people when they come here. And if you don't have ties to a major city because you haven't been here your whole life, you're going to pick up your suitcase and your daughters, and you're going to tell your wife that you're moving to Saskatchewan, Saskatoon, or the closest place.
If rule number one of investing is to not include appreciation, and you can buy something for $300,000 that rents for like 18, 19, $2,000 a month and hang on to that thing forever, like, Saskatchewan sounds pretty good, no?
No, yeah, I'm like, that's what I'm saying.
Right? And like, jobs, like
on a place like those two major metros to me are sure things, right? It's like, even like you're saying, like, you don't need the appreciation. You can buy them at a 10 cap, right? And if they just go up at the value of inflation or whatever. But to, like, the other one would be like maybe a Cornwall, Ontario, because again, like, you're seeing a lot of, I think Walmart's distribution center is there as an example. It's an hour from Montreal, an hour from Ontario, or from Ottawa, right? So areas in which like there are good jobs, because to me, like as we start to see potential wage inflation and real estate just trade based on actual fundamentals, the capital, the good capital, the good growth and the good economy is going to follow the jobs, right? So places like and you go to Cornwall, you can buy a house, you buy a duplex for like 300 grand.
The average person can afford to buy the average house.
Well, but if you're thinking from an investment perspective, it's like, yeah, like, and so those people will always they're your price floor. And as long as those people can earn wages in that area, which they can, right? And same thing in Sudbury, because there's mining jobs. Like miners are making stupid money in in Northern Ontario right now. Like it is crazy. I go up there like a couple times a year and then we also are like, we're up there just looking at properties, purchasing properties, etc. And like the balling out that you see is like everybody's new truck, new trailer. They got like the big road.
Yeah, because they're making like
old pickaxe,
$60 an hour, and like
oh man, and like that's
short life expectancy.
Now they have like bonuses and stuff like that. Like guys like doing machine operating. Like it feels like Fort Mac and like the 2010 kind of stuff, right?
What's
like,
there? Is it like a lithium mine or something for
where's
batteries?
that? Well,
I'm asking where you're talking about.
Oh yeah, well Kirkland Lake's gold, right? And then like Sudbury is a nickel capital, I think, of like North America, maybe the world, I don't know. And like so these are things that are becoming this like they're necessary commodity metals for electric vehicles, etc. So
that's what
you're ramping up lithium, like they're putting in gold mines in like crazy places all over. Like there, there's a new one in the Spanish Forest as an example. Like the infrastructure spending up there is just wild to me. And like Sudbury, they saw a huge inflation as a result of COVID, but prices there are probably just above replacement cost for your average product. But like you go outside of Sudbury, like you can come south, so closer to Toronto, like somewhere between Parry Sound and Sudbury, and you can buy, and this is in the French River, and I'm gonna end up inflating this market as a result of this conversation. But
lots of people are hearing this right now.
What's that?
Lots of people are hearing this.
All 6 people are rushing over there.
So, but you can buy I think we just picked up a fourplex for like 300 grand, right? Like
a legal fourplex or a fourplex?
A fourplex. This is
Kirkland Lakes
to Toronto than Sudbury, right?
Yeah, Kirkland Lakes, right?
Well, I hope
so. No, Kirkland Lake is north. This is French River. So
okay, French
so
River.
It's like if you're driving up the 400, it's like Parry Sound, French River, Sudbury, kind of like that's like loosely.
Is this in Manitoba?
No, in Ontario. It's close, man. It's like a 2.5-3 hour drive from Toronto.
Nice.
So why okay, so who's buying that stuff? End users, or like, I mean, you're not an end user, and we all so let's kind of segue into that. Well, so we got this K-shape economy now, right? And we have all of these things in the sauce. So like, what does the Canadian real estate market look like a decade from now?
Again, like to me, I think if you return to the, a lot of these unskilled labor being pushed out of the economy, like I've traditionally always tried to tailor housing to the type of people that most people don't want to rent to. So a lot of your like OW, Ontario Works, ODSP, et cetera, like people who most landlords are like, I'm not going to, at least that was my experience, right? Like, because I work with a lot of landlords, I work with a lot of investors, and a lot of them don't want to take on those type of tenants. So
in the GTA, it's different though.
I mean, yeah.
Like I'm saying, in the GTA, they say no because that is well below market rent.
Right.
Yeah. When you're in a community where the market rent is $600-700, getting somebody on the same provincial support, not so bad.
Well, yeah, but I don't even know if there is a market in Ontario that is like sort of the price floor. I would say, like, I tried to do some research on this, but basically, like, it seems like the price floor of rent in the province of Ontario is sort of set at what your ODSP shelter allowance would be, or OW shelter allowance would be, which I think has gone up. Now I think it's like just shy of $1,000. So, and I think if you were to, you could probably test this. You could probably put a unit up anywhere in Ontario for $1,000, and I can almost guarantee you would get like 100 inquiries, right? So, and that would be, Kijiji, Facebook Marketplace, whatever. So to me, I think that you're going to start to see, again, like I think we'll start to see a workforce where migration will have, I would say, almost deflationary effects on the wage side. I think unskilled labor will start to disappear. I think like demand for unskilled labor will start to disappear as we start to automate, innovate, et cetera, regardless of whether or not we repatriate the supply chains. And I think like, if you think about, like, I grew up about an hour north of Toronto, so a small town in the GTA. And it would be one of those markets, like famously, you know, for in the 90s, like, you know, people would make fun of me at the school that I went to because I was from Keswick, right? So, and it was like, you know, often associated with welfare and things like that. And I think you're going to start to see a lot of those. There's a lot of people who can't afford the quality of life or can't afford the lifestyle, like you're saying, in the GTA, and they're going to start moving elsewhere, right? And they could be north, it could be east, it could be west, whatever it is, but they're going to start going further away for their retirement, right? Because we have, like, to me, the biggest deciders, at least domestically, the biggest deciders in what's happening in the housing market in the next 10 years is baby boomers, right? And so what are they, how are they going to behave? And to me, it's like, I think you're going to see a lot of this drive till you qualify to find housing, like ownership outside of the GTA. And you can go, you know, proximity to a hospital, maybe proximity to a border in the US, proximity to a casino. Like I work with a lot of guys who develop this kind of stuff, and those are like some of the things that they're looking for, right? So a place like Cornwall becomes compelling, Sarnia, maybe Windsor, et cetera, right? You know, Kirkland Lake, French River doesn't become as compelling, right? But though, and so to me, it's like, where is your sort of price floor, or where's your marginal renter moving, and where's your marginal buyer moving? The people who because I think that as a result of the K-shaped recovery, there's more people on that bottom line than on the top line. We don't feel it as much because of where we're located, right? And maybe because of our careers and our lives and whatever. But there's more people on that bottom line of the K-shaped recovery. Where are they going? What are they doing? Because there's more dollar volume that exists on that bottom line than on the top line, right?
Good
More
points. Yeah,
more
so
transferred from the bottom line to the top line.
I think, well, I guess it was in the middle, and I think more got
the
pushed.
volume,
more
total
people.
volume is
More
there,
people, but sending it up to
For sure.
the top line
Yeah.
eventually.
And I think the baby boomers know this, and I think that they've got the wealth to be able to make those decisions. I mean, not all of them are in that position. I deal with a lot of them where they're selling their most prized possession, and they don't have a retirement plan that involves them staying. And
Well,
so
and
they
who the
have
hell
to.
wants to go into a retirement home now?
I was
As
at one
part
this
of the
week.
plan.
I was at one this week. It's $4,000 a month just for the regular apartment. Then if you want services on top, nobody's
Look at
going
how
into
the
retirement
horrible
homes
press
yet.
they got. Like, look at how
No, these are
bad
nice
people were
new-
being treated.
These are new fancy luxury ones that are out there that the competition is driving to better standards. But the people that are moving, like, they do have to make a decision now. They're in their 60s, maybe pushing 70. They don't have the money to be able to stay where they are. They don't have the, some of them still have small mortgages and stuff like that. They don't have the income post-retirement to be able to support anything locally whatsoever. And they're looking at what their options are. And there's not many. Where does someone go? Like, where do you go to maintain that lifestyle? All those things that you name there, the hospital, the casino, all these type of stuff. It's like, where do you go? That's
why you go far, because it's like, you know what? I can outbid everybody over here, get something amazing. Like, I'm not working anymore.
You're bidding against your neighbors, though. Your neighbors drove with you. They were 3 cars back. They're bidding on the same property.
They should have been in the front.
I think that the interesting part when you talk about it that way, TK, is like that demand starts to dissipate, right? Because like you have a lot of, let's say you have this concentration of population in the GTA, let's just say, right, or the Greater Golden Horseshoe, and as they start to dissipate, they go up. There's more markets for them to go. So like the competition does decrease as you get further away.
Yeah, how many people actually want to buy in those markets? Like one
guy,
they
got their grandkids. They're going to be too far from my grandkids.
Yeah,
it's a stalemate.
Well, if you look at like, your typical, there's like these Y graphs that they draw in urban economics. Maybe I'll try and share one on Twitter or something after, but basically like it's proximity to, right? So like a manufacturer they want to be located somewhere in the middle of, where they're getting their inputs and where they're selling their outputs, right? But human beings have like end users have the same kind of thing, right? Like you're saying, like, I want proximity to healthcare, but I also want to be close to my grandkids, or I need to be close enough to a major international airport so I can fly to Florida for the winter, but I also want, to be in a rural area or whatever it is, right? But like,
I want an acre.
Yeah. And so like, as we start to see, that's why I'm trying to think is like, what do boomers want, right? Like what, and the more that we can think about that, you can make informed investment decisions, right? Because I really do think they're the next big move. Like the reality is millennials predominantly purchased and sold real estate in during the pandemic. I think something like 25% of millennials bought a home since the beginning of COVID. or maybe transacted a home, but I think it was bought. And boomers didn't really do a lot, right? Like they weren't doing a ton. A lot of them stay put because we have this huge concentration of wealth.
Nowhere to
in
buy.
the primary residence. What's that?
Nowhere to buy for them.
Right. And
Right.
well, and it's like, well, where do I go? And like they've seen market cycles. Like there's a lot of psychology behind it too, right?
Yeah.
Anybody who's a boomer right now, they're seeing this run up, right? They're seeing all of these people, they're seeing the whole country talking about housing, everybody flipping houses, making tons of money, talking about speculating, whatever. And they're thinking, this sounds a lot like when I bought my house in 1990, right?
Yeah.
And so they're like, kind of just, let's just wait. I'm just going to sit this one out and see how this all shakes out, right? And
Yeah.
that's kind of where we're at now. I think like as we exit this and they start getting back to more normal buying powers, they don't want to get into bidding wars. They don't want to have bidding wars on their houses, right? They don't want to have hundreds of people through their houses. They don't want to have some fast talking agent come in and tell them to rip all their furniture out, restage, paint, blah, 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 and then put it on the market. I'll send you on vacation to Mexico for a week, and then I have 100 offers for you when you get home, right? They don't want that. They really don't.
Good services.
Well, but so how many people are?
And I'll do it for 1%.
Yeah.
How many people are out there that like in the last couple of years just refinanced their house to help their kids buy a place? And, they were, because in their forecasting, the market was still going up, and they had, felt wealthier because of what was going on. And then all of a sudden, the house that they bought for their kids going down in value, their house is going down in value, and their retirement that they've been counting on is also going down in their minds. How many of them are like, fuck, I better sell this thing now before it gets even worse? Because I don't know what's going to be, because I did live through the 80s and the 90s, right? I did live through 2000s. I did live through 2017. And like, I'm younger than the boomers, even though maybe I act like a boomer. And I was even like, this is 2006. This is 2007. Everything is real estate. Like, I don't feel good anymore. I don't like this. I'm nervous, right?
Mm-hmm.
And so those guys are probably, there's different levels, but people that were really counting that house as a retirement must be like, the fuck do I do now? Yeah. Especially if they just levered it more, right?
Well, I think statistically, like, what the person you're describing is the majority of Canada, right? Like I think the stat is like 70% of the Canadian net worth is concentrated in the principal residence, right? So like, and the move that you're describing, this is the part that's really messed up to me, right? It's like the move that you're describing is actually levering up again, like your net worth, right, to create hopefully like a more net worth for your children, but it's exposure to the same asset, right? So like you're borrowing against eventually their inheritance, realistically, right? Because that and for your kids, that's an asset to them. That it's an account receivable, really. Like eventually you're going to die, and they're going to get your. So it makes sense maybe from a tax planning perspective, right? They don't have to pay probate tax or whatever on some of that money. Now it goes into something that's an untaxable asset, untaxable capital gains asset for them. Like I get why a lot of it makes sense, but the problem is it increases let's say your generational wealth. It increases your family office's exposure to the primary residence being your primary investment vehicle, right? Canadians don't have, and this is where, from my perspective, you're not creating a diverse enough economy, like at its core, right? When you want to get to a place like Germany, as an example, where most young people are renters, right? You see a lot of multi-generational home ownership, but like, and in the detached space is mostly ownership, but anything apartment style, any young people that are in urban areas, it's all institutional ownership and they're renting, right? But the average net worth of a millennial in Germany is higher than the average net worth of a millennial in Canada, right? And they're not invested in real estate at all on average.
Hold on, I thought you had to own a home to be rich.
Right.
Yeah, exactly. Yeah, I know, right? Yeah.
We've argued
if you don't own a home, you'll never make it.
Yeah, that's the Canadian thing.
Yeah. But we've argued it a bunch of times that like if you rented and invested your money in something, that was, I guess, timed well, because everything's fucked right now, but like you could have made a lot of money outside of real estate, done way better than inside real estate for sure. If you timed things right, you could have made some ridiculous money off of very little investment and cashed out and bought a piece of real estate.
The boomers right now don't have FOMO, they have fuckmo. which is
Fuck.
fear of the kids
Oh.
missing out.
Really?
That's what it is.
Especially when
I got a meeting today. So today's meeting, I'm meeting with somebody who's financing their kids, doing the whole mortgage for them. And they told me the area that they're going to be buying in. And it's like, I'm 1 to 1.5 million for sure. Like, you're not getting it any cheaper. And they're going to be the kid's bank. No bank necessary.
Because the kid can't qualify. This is the problem. The
parents
have watched the market run up 30%, 30%, 40%, or whatever the numbers have been, and said, holy shit, my kid is never going to get in the market unless I helped him. And I just made $1 million last year by doing fuck all but sitting in this thing. Right?
Yeah. And I want
that
my
was
kids
a
to have the same
lot of
opportunity.
people. A lot of people.
I moved one couple last year, and their kids moved to Saskatchewan, Saskatoon, actually. Both their sons went out there, or one son did. He said it was not bad. So then the other son didn't have much tying him down. So they sold. They're all living happily ever after in Saskatoon, the whole family.
Yeah, I believe it.
Yeah.
I believe it for sure.
Takes balls,
I don't know if I could do it, but I believe it.
That's the move right there. I'm telling you. You live happier and longer, and you get to see your grandkids, and your kids will have a better life. I'd love to say everyone belongs in Toronto. We've talked about this before, Darryl, but not everybody belongs in Toronto.
No, and like, I think that, when you hear like European people talk about, how America, especially like when they talk about New York, right? People work to live, they don't live to work or whatever, like those comparisons, like you really feel that in Toronto compared to other places in Canada even, right? Like, it's just like, and I don't know, like I started doing TikTok, right? Like, as like, just to try and make TikTok more bearish and like pointing at charts and stuff like that. But like the sentiment there from young people of like how Toronto is just basically like a depressing city because you can't get anywhere, right? Like, I think you're kind of in that late cycle economy of and I don't know if you've like ever heard of the book Life and Death of Great American Cities, or Death and Life of Great American Cities by Jane Jacobs, but I'd highly recommend reading it. But it talks about like sort of these cyclical things that happen both on like a planning side, because she was a planning analyst, or like planning critic, I guess, but also on the economic side, right? And I think Toronto's really in one of those like very late cycle kind of things where you start to really experience some challenges. And I think that like you can emerge victorious on the other side of that, but the next decade is going to be very important for decision making for the city of Toronto. I really feel that way.
With regards to what kind of decisions? What's the most important decision that the city of Toronto has to make?
Well, I think it needs to be a city in which you can have, like, New York did a good job as things started to get insanely unaffordable, and they tied things together nicely. Like, you have like a lot, working class living in places like Brooklyn, and Brooklyn's like a super sexy place now, whereas in the 90s it was not at all, right? And you're even starting to see ramping up in places like Queens, et cetera. Whereas like Toronto, we have these boroughs, but they're not even more affordable than I mean, you're getting Scarborough, I think, Darryl, you have a project yourself, right? At like, what is it, $1,400 a foot you guys are selling? $1,200 a foot?
We're not selling anything, but prices right now, like I just tweeted the other day, I have a client in my other business in Stouffville that just shelved the project because they have to get $1,100 a foot in order to make it feasible. Right. I mean, look, when I first bought my property in Scarborough, I got an analyst to give me a report, said $750 a foot I could sell stuff for.
Yeah.
Right now, guys are selling between $1,000 and $1,100.
Right.
I don't know which way things are going on the next launch right now, but the last couple have all been $1,050, $1,080.
Yeah.
But I don't know that that's going to be the same thing moving forward for the next few months. I mean,
right.
If you're downtown, maybe.
And I would agree with you. Like, I actually think that, I think when you think about Toronto, you need to think about it at a national level, right? Like, as much as I hate to be that guy who's like, oh, it's the capital of Canada or whatever, but it's like an economic hub of Canada. And if we had a world-class city or a World Trade Center here, that's it, right? And so it is controlled a lot at a national level. And I think the first time I was ever on your podcast, I said, the best thing that the government can do for Canada, for the future of Canada, is to let the housing market burn to the ground. Let it burn to the ground. And like, poetically, like a phoenix, let it rise from the ashes. It has to happen. Seriously. Like, if you don't let that natural course of business take place, like, these are real things that happen in nature, right? Like, a forest fire happens so that the special type of fungi can come and cleanse the earth, and this new type of tree grows. Like, this shit is real, right? Mm-hmm. And like, it happens economically too, because it's really just a function of like a bunch of animals trading paper with each other.
Daniel,
right?
wake up. You're dreaming. Wake up.
Yeah,
It's all
actually,
a dream.
I think that like the more that we try and control what is inevitable, the more that we break the result, right? And so
The
like
bigger the fire is going to be.
yeah, exactly, for
Yeah.
sure. Yeah.
And the longer it'll take for us to get to
yeah.
that
And
other
so
side of the tunnel.
yeah,
It
I think
wants
that
to burn, man.
now it's the reality is in Canada, like we kicked the can way further down the road than we should have, and now the Fed is responding to inflation, and we don't have a choice but to follow suit, right?
Daniel Foch, long time bull, short time bear.
Yeah.
Short-term bear. No, but I feel the same way.
He knows it. He knows it. That's okay. It's okay.
I feel the exact same way. The thing is are they gonna douse it out and let it burn? So okay.
What could they do, honestly? Like, what could the government do to make things better? They could increase the supply chain and flood the market with supply. No, they're not capable of doing that.
Impossible. It's not even
the Fed or the province can't do it, right? They could increase maybe the CMHC cutoff to 1.25 million to try and strengthen the price floor. Whatever.
Increases the price.
Remove stress tests.
They could remove the stress test, right?
Yeah.
I think those are really the three things, right? I don't think there's
amortization period.
Yeah, I mean, to me, it's like the stress test will get peeled back before they extend an AM, right? I don't know if we need longer mortgages here. I think we need to get rid of the stress test if they want to strengthen the price floor. I think that those policy decisions are probably already in the works right now, but I don't see any of them being deployed until we're at like -30, -40%, honestly. Like, and then they're like, okay, yeah, this is getting out of hand. We should probably step in here and
-30, 40% where?
That's
in
Canada
or in Toronto?
No, I mean you can't. Yeah, I mean
Oshawa.
You can't say like. I guess I am referring to again, and like when I talk about the national context, right? You have to imagine that like the amount of trade volume, the amount of dollar volume that happens in the Greater Golden Horseshoe is a huge portion of the amount of dollar volume that happens in Canada, right? So I think it's like, what is it? It's like a third of the population even lives in sort of like below a certain line in Ontario of like the entire country, right? And like I think 90% of the population lives within like 100 miles of the US border or something like that. Maybe it's a further distance.
It's very close to that. Yeah.
Yeah, it's like
it's insane.
So I mean, again, when the government is I'm sure that national metrics matter, but if you think about again, like where are we trying to attract most immigrants to? Places like Toronto, Vancouver, et cetera. Where are we, these are places that
where do most politicians at the federal level live?
Right. Exactly. Yeah. No, that's a good one. Right. Like, and so it's, those are places where they're going to try and control the pain the most. Right. And where they're paying the most attention to the data. And the Greater Toronto Area, as a very good example, is down in some areas like close to 30% already. So, I think that we'll start to see a policy response. I think the stress test is like TK. I would agree with you. I think that's the first one.
It's coming. Yeah,
for sure.
That's coming. Some
change
to it.
Right? Yeah. We're at the stress test rates from before. Yeah. The stress test did its job now. Right.
So do we get a recession, or do we get a depression style event?
Well, I think if you ask people on the lower line of the K-shaped recovery, they're already in a depression style event, right? Like I think that we just haven't really felt it. And if you're in the Greater Golden Horseshoe, you probably haven't felt it. But I think we'll have a pretty severe recession, right? I think that, but the challenge is that phenomena is different for everyone, right? And so for people who are on and that have been pushed down out of the middle class, it's going to suck a lot more. I think the reality is we're probably like, our output really, you don't feel the economic output of Canada growing right now, right? So I think we're probably already in a recession. The challenge is, inflation is running so high that it's pushing up the GDP numbers, right? So, and it's really hard to control for that. It might take a while for those numbers to actually show up in the data, right?
So, and then one other thing I just wanted to add into the mix here is when we were speaking to our friend in Saskatchewan, what he mentioned, and I think it's integral, is that like our government is like suffocating our ability to export things. Right. And our prices are kind of being fixed by our trading partners to the south. And like, this is why I kind of see, like, between the age and just geopolitics and just how things are playing out, like I just see a decoupling more from the States. And like, don't we need those resources to stay at home? Like, can't Canada become this like superpower that can afford this growth if we get more control over our natural resources and start putting them out to the actual market?
For sure, yeah. I mean, I think we're the second most resource rich country in the world, right? I would say it's we don't have the leadership to do that, and I don't think we have like for the past century, right? Like, and it might go return to that authoritative versus democracy question, right? Like,
Yeah.
but
We don't have the army to do it.
We have trade agreements that are not in our favor, right?
Yeah.
Because there's other.
We don't even have people that want to fight for the country, let alone an army.
There's other things that we don't have, and those agreements have been in place for a while. But you're right. I mean, we could be one day, but it's not happening anytime soon.
Right. I think we have what it takes. Like, I think we have what it takes physically, quantitatively. I don't think we have what it takes qualitatively. And that would go back to the spirit of the Canadian people, right? Like, and I'm not like, that's not to be insulting. Like, it's just like, we don't really want to be a global superpower, right? Like, again, if you go back to that discussion about China, like the capitalistic system, being built into a true Marxist system, capitalism, at scale, and you can see this in any country that ever ran or sort of had a power position globally, right? There has to be some sort of exploitation of a lower class and a middle class and an upper class, right? The proletariat and the bourgeoisie. That's sort of what this whole system relies on from a capitalism perspective, right? And in Canada, we were like the reason we could attract immigration, the reason we had such high quality of life is we almost had like this Scandinavian style. Everyone's middle class. Everybody can finance a $50,000, $60,000 Benz. Everybody can afford a 3,000 square foot house within driving distance to a major airport in the central financial district. Now that's completely gone, right? And it could be gone as a result of a number of different factors, but mostly probably monetary policy and misallocation of wealth, right? Of assets.
My memory today on Facebook came up 2013, and I never read these, and it just came up, and it was like I couldn't believe that the timing of it. But it's from 2013, and it says a 3,000 square foot house is now 800,000.
Right.
How are young families ever going to be able to afford a home? And
Yeah.
I was like giving advice to young buyers, like get into the market and build slow and all that kind of stuff. Yeah. 800,000. What's the average 3,000 square foot house now in the GTA?
Probably just shy of $2 million.
It's a lot of money.
Yeah, it's like 198.
Like the lowest would be probably 1.5 in Oshawa.
It broke 2 million.
Yeah, if you're in Oshawa, right? Maybe like a 1.5. Yeah,
the lowest, right?
Bananas.
Yeah, like 3,000. I mean, 3,000 square feet's big, man. Like, if you're, up here, like in Keswick, you're probably again like 1.5. I think we have one for sale right now. It's like 1.6, right? Like, and that's 3,000 square feet. Like, because you can't even build that for $1 million now.
Oh, that's the thing. I went to this house today, and the agent's like, "How much do you think to renovate this?" And I was like, "You have to literally rebuild this thing. There's some 800,000 to $1 million. It's a little semi."
Yeah.
Like, construction costs are crazy. Did you see my tweet? 5 years ago, hard costs in construction for a mid-rise building were $250 a buildable. Now they're over 500.
So mid-rise, that's being concrete?
Yeah.
Yeah.
Has to be, yeah.
Yeah. So over 6 stories then.
Yeah.
Yeah.
Well, I feel like I got a lot smarter today from this conversation.
Okay. I just feel more confused.
I've learned
me
a lot.
too. I feel dumber.
You've given me a lot of stuff to think about and a lot of content, and I definitely am always happy to have you on the show. It's awesome.
Yeah, glad I could be of service. I'm always happy to join you guys, and feel free to give me a shout whenever you're missing a guest. I love jumping on, especially on short notice.
We really appreciate it. Look, we went into like a soccer style overtime here. This was great.
Yeah,
I can talk
I feel
forever.
Like we always run over an hour, right? Like, I think.
Oh my God.
I got a hard cap. And then it's good, man. Like, these are the kind of conversations that are good, right? Like, you gotta just let it go and just shoot the shit a little bit.
100%, while deflecting all the insanity. I don't even
the
know how
listeners-
you can possibly handle all the feedback you must get on Twitter with the amount of followers you have.
Yeah, it's especially when the spaces are on, man. Like that's part's tough because like I got people DMing me like mute this guy, like, oh shit, this guy's saying stupid. I'm like, look, I'm like, no, I can't be a police officer here, guys. Like, I'm just like, I'm not gonna do the best job. Like, I literally just press the button and let people talk, like really, and then like try and steer it in a decent direction, make sure people aren't screaming at each other. Like, I'm not.
And they do. This is the draw. This is one of the draws. Yeah. If you haven't checked it out, check out Mr. Foch's spaces on Twitter at TORE, Toronto Real Estate. It's every Thursday. Oh, it's changed now, right?
There's 3 p.m. We're gonna go to summer hours so people can do it. Like, because I figure a lot of people are driving up north on Thursday nights and stuff like that for so 3 p.m. Thursday, 3 p.m. Eastern time, because it is like pretty Canadian now. We got people all over the country tuning in. And yeah, the next one is actually, I guess you guys are putting this episode up today probably. So the next episode is about the Bank of Canada rate hike. We're also probably going to do like maybe a half hour on the election as well. Just because that's a provincial election day. Although I mean, I saw the polling numbers today. It's something like 90% likelihood that the Conservatives are going to win. So nobody's really even talking about it. But we'll talk a little bit about policy there, and then we'll go to the Bank of Canada discussion. So it should be a good one. I'm really excited about it.
And then you also have a YouTube channel called the Canadian Bricks and Mortar.
Something like that. I'm a brick and mortar. I didn't change it, but yeah, I just posted like it's interesting because I was actually going to ask you guys, right? Because like you guys are crushing it on YouTube, and I wanted to ask how your audio side has been, because mine, like the audio does well. Like I do well on the podcast platform, but YouTube I can't get anything. Like I get maybe 1,000 views max, right? So
we don't have the secret. If you're asking us,
we're doing good in the audio too, though. We're doing really good in audio too, yeah.
But we're not.
We're on friggin' fire, baby. We're on fire.
When we know what we're doing and why it's working, we'll write a book and we will give you that copy. You know,
our free ebook. If you just look in the description below. All right, Mr. Foch, it's been a pleasure, and I have to go to the bathroom really badly.
Okay, have a good pee. And
thank you, sir.
Enjoy your Sunday, boys.
Always a pleasure. Always a pleasure.